Most of us think that we are already doing all we can to minimize our taxes, that we are legally and honestly paying no more in taxes than we really need to. But the U.S. tax code is very complex, even for tax advisors. So it's more than a little complicated for many of us to understand the long-term difference between tax deduction, tax deferral, and tax exemption, and to know how much more we could be saving in taxes over the next 20 or 30 years of earned income as we prepare for 20 or 30 years of retirement income. So how can we be sure that we take full advantage of the tax code and that we don't pay any more in taxes than we really need to? With the Safe Money Lifetime Tax Strategy. The Safe Money Lifetime Tax Strategy is not tax advice or tax preparation, and it does not require you to save any more of your current income, nor does it require any unusual or unproven interpretations of the tax code. It is all done by simply rearranging the way you use the money you already have and the money you already save by taking advantage of all the tax code provisions available to you. And the tax benefits are almost always substantial. For example, Paul and Lacey were in their early 40s. They had a total of $119,000 in their 401k accounts, into which they were saving 6% of their salaries on a tax-deductible basis. They were also investing $600 a month into a tax-exempt 529 college savings plan for their 3 children, while paying $200 a month on credit card debt. They had $160,000 in their home equity with a mortgage interest tax deduction of $280,000. What's more, they had their tax returns prepared by a professional, so they assumed there was nothing more they could do. But with the Safe Money Lifetime Tax Strategy, they were able to convert their tax-deferred retirement savings into tax-exempt retirement income, completely remove the risk of investment losses, as well as the restrictions on their college savings plan, and create a tax-exempt medical expense reserve fund. So they are now projected to save more than $390,000 of income taxes, and projected to gain at least $840,000 of tax-free retirement income, based on today's tax rates and 30 years of retirement. So ask yourself this: does it make good sense to assume that there is no more you can do to legally take advantage of the tax code and minimize your taxes? Or does it make better sense to talk with the Safe Money financial security professional who asked you to watch this video?